5% plus rates on Vanguard's taxable money market funds. That's what we'll be talking about in today's video. And specifically, here's what we'll be covering. What's Vanguard's core money market position? What other money market funds does Vanguard offer? And is it worth switching to one of them? Plus, who should take a look at Vanguard's cash deposit? Hello, members and super savers. So this video is about Vanguard. If you're with Fidelity or Schwab and just watching this to see what else is out in the marketplace, then make sure to check out these Fidelity and Schwab money market fund videos afterwards as well. I've linked them in the video description below. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. Vanguard offers 6 money market funds in total. These 3 are taxable, meaning you have to generally pay federal income taxes on the income earned from them. A certain percentage of the income earned may, however, be exempt from state income taxes. More on this later. These 3 are tax exempt. More on them later as well. For now, let's get started first with VMFXX, the Vanguard Federal Money Market Fund. VMFXX is Vanguard's core money market fund position for brokerage and retirement accounts, what they refer to as the settlement fund, basically where your uninvested cash is parked. Any cash you transfer into your Vanguard account that is not invested goes into VMFXX, and any cash that you transfer out of your Vanguard account also comes out of VMFXX by default. On Vanguard's website, it shows a minimum investment amount of $3,000 for VMFXX. But because this is the settlement fund for your Vanguard account, in reality, there is no minimum because it's converted automatically and you don't have to consciously buy or sell it. So let's kickstart this table of Vanguard's 3 taxable money market funds with the Vanguard Federal Money Market Fund, VMFXX, Vanguard's core money market position. It's settlement fund. Here's the 7-day yield on VMFXX at the time of this taping. Woohoo, it's pretty good, or? In fact, Vanguard's money market fund yields rank among some of the best across the leading brokers, which may or may not be due in part to the fact that the expense ratios on their funds are also amongst the lowest in the industry. Do remember, though, that the 7-day yield is always net of the expense ratio, meaning you don't need to deduct the expense ratio again from this number. Here's a summary of what VMFXX holds from Vanguard's website, what's in VMFXX's portfolio, basically. This row shows the weighted average maturity, the WAM, for VMFXX's holdings. Generally speaking, the longer the WAM, the higher the interest it should earn in normal times. But a longer WAM also means that a fund's share price will move up or down more in response to changes in interest rates. However, given the overall short WAMs that we're talking about in this video, I don't think this matters too much. Right. So, as I mentioned earlier, the income earned from Vanguard's 3 taxable money market funds, including VMFXX, are in principle fully taxable at the federal level. A certain percentage, though, may be exempt from state income tax. Here's the percentage of dividends exempt from state income tax in 2022 for VMFXX. Unfortunately for California, Connecticut, and New York, that percentage is 0 due to their more restrictive taxation rules in this instance. So, that was the settlement fund, VMFXX, Vanguard's core money market position for the uninvested cash that you have with them. Let's talk now about the other money market fund options that Vanguard offers. Let's go through the other 2 taxable money market fund options at Vanguard first, and then we'll move on to the tax-exempt money market fund options. Next on the list is Vanguard's Cash Reserves Federal Money Market Fund, VMRXX. As you can see, VMRXX's 7-day yield, fund holdings, and weighted average maturity are very, very similar to that of VMFXX. When we go to the product summary for VMRXX, though, it does have an additional sentence that VMFXX does not have, which states VMRXX invests more than 25% of its assets in securities issued by companies in the financial services industry, which includes securities issued by certain government-sponsored enterprises. This basically means agency securities, by the way, which is also how Fidelity seems to differentiate between some of its different government and treasury money market funds. When we look through the current portfolio composition, though, both VMFXX and VMRXX look once again very, very similar. After a bit of rounding, both money market funds hold practically the same percentages of repurchase agreements, U.S. government obligations, and U.S. Treasury bills. VMRXX does have a higher percentage of dividends that were exempt from state income tax in 2022 than its almost identical twin, but again, these percentages can vary from year to year. As we can see from the percentage of dividends that were exempt from state income taxes historically for both money market funds in 2020, in 2021, and in 2022. Now, for those of you newer to Vanguard, you should know that VMRXX was created in its current form after the summer of 2020 only. However, VMRXX had a previous life when it operated under a different name and investment strategy, and was actually Vanguard's prime money market fund. So, perhaps Vanguard is still tinkering with the investment strategy and the direction that they want VMRXX to take. Only time will tell, I guess. At the moment, VMFXX and VMRXX look more similar than different, with the only true significant difference being size. VMFXX is more than double the size with net assets of over $251 billion compared to VMRXX with net assets of about $106 billion, which shouldn't really be a surprise given that VMFXX is the settlement fund position at Vanguard. Now, let's move on to Vanguard's third taxable money market fund, the Vanguard Treasury Money Market Fund, VUSXX. Its 7-day yield is similar to the other two taxable money market funds, but as the name gives away, VUSXX invests primarily in U.S. Treasuries. Going back to this current portfolio composition from earlier, we can see that VUSXX does indeed hold a significantly higher portion of U.S. T-bills than both VMFXX and VMRXX. VUSXX also has a higher WAM than the other two taxable funds, and 100% of the dividends, the interest that it paid, was exempt from state income taxes in 2022. In addition, VUSXX is the smallest in terms of net assets when compared to the other two taxable money market funds. Again, this 100% can and does vary from year to year, as we can see from previous years. So, that was Vanguard's 3 taxable money market funds. Now, let's move on to Vanguard's 3 tax-exempt money market funds. The Vanguard Municipal Money Market Fund, VMSXX, is for those of you who live outside of California and New York. The Vanguard California Municipal Money Market Fund, VCTXX, is for those of you who live in California. And the Vanguard New York Municipal Money Market Fund, VYFXX, is for those of you who live in New York. Here are the 7-day yields for each of them. In terms of fund holdings, VMSXX invests in short-term, high-quality municipal securities from different states. VCTXX is intended for California residents only and generally invests at least 80% of its assets in a variety of high-quality, short-term California municipal securities. VYFXX is intended for New York residents only and generally invests at least 80% of its assets in a variety of high-quality, short-term New York municipal securities. This row shows the weighted average maturity, the WAM, for each of these funds. This row shows the tax exemption status of fund dividends earned. VMSXX dividends are exempt from federal income taxes, with a small percentage also exempt from state income taxes. VCTXX dividends are exempt from federal and state income taxes for California residents. VYFXX dividends are exempt from federal and state income taxes for New York residents. These additional tax exemptions on a state level are why the yields here are so much lower. And finally, in the last row, these numbers show how big each fund is in terms of net assets. Generally speaking, when it comes to municipal securities, The higher the tax bracket, the more it might make sense to consider them in a taxable brokerage account. Having said that, the 7-day yield on this New York municipal money market fund, for example, is currently so low that it doesn't really make sense for us in our taxable brokerage account with Vanguard, even when we factor in its tax-exempt status. But we'll save the topic of munis for another day and another video. So, if you're considering alternatives to VMFXX, Vanguard's default settlement fund or core money market fund position, there are a few things to keep in mind with these 3 tax-exempt money market funds, as well as the 2 taxable ones that we talked about earlier. The first thing to keep in mind is that unlike with VMFXX, you need to buy into the other money market mutual funds yourself, like you would for any other type of fund or security. There is no automatic conversion as there is for VMFXX. Second, there is an initial investment requirement of $3,000 for all the money market funds other than VMFXX. The nice Vanguard fella I spoke to did say that after you've satisfied the initial investment of $3,000, you can add in increments as small as $1. And I quote, "We won't kick you out if you fall below $3,000 after you've made your initial investment." We're pretty liberal about that. I can't confirm or deny this given that we've never been in that situation, but it would be great to hear from other Vanguard old-timers if this is indeed true. Drop a comment below and let the community know. Third, because you have to buy into and sell out of these other money market mutual funds yourself, remember, no automatic conversion, you need to plan in advance if you want access to the cash that's tied up in them. For example, to buy another mutual fund, stock or bond, or if you just want to withdraw or wire out some cash, assuming you have a normal brokerage and or retirement account with Vanguard that is not set up for margin trades. And it's precisely because of all these reasons, this hassle, I would say, that we just leave our uninvested cash at Vanguard in VMFXX. Plus, there's barely any difference between what this default settlement fund is yielding at the moment versus what these 2 other taxable money market funds are yielding. But as I always say, everyone's financial journey is different. So you'll need to decide what best suits your individual circumstances, goals, and expectations before diving into any investment. Because Vanguard also offers one more settlement fund option, the Vanguard Cash Deposit. Let's talk briefly about who might want to consider this. Personally, I wouldn't choose the Vanguard Cash Deposit over VMFXX as a settlement fund alternative. The reason being that it simply yields much less, as you can see here. Having said that, I do know that we have some fairly conservative folks in our community. If this is you, and you're worried about parking your uninvested cash in VMFXX because it's a money market fund, or simply because you want something that's FDIC insured, which the Vanguard Cash Deposit is, then this might be something worth considering. I've linked this page in the description below for those of you who want to learn more. Just click on the Learn More button here because you do have to switch into the Vanguard Cash Deposit if you want to select it as your settlement fund rather than VMFXX. So, what is it for you? The Vanguard Cash Deposit, VMFXX, one of the other money market funds, or something else altogether? And why? Drop a comment below and let me and the other members and super savers know. And for those of you who want to learn more about the nitty-gritty details about money market funds, check out this Money Market 101 video here where we dive into the details and the pros and cons of government, prime, and municipal money market funds. I'd also love to invite you to continue to support our channel through membership so that we can keep producing one-of-a-kind, unbiased, sponsorship-free videos for our super saving community. Get your questions answered in our next live member Q&A on August 25th at 5:30 p.m. Eastern Time. And check out our latest member videos. To learn more about Diamond NestEgg membership, visit our channel page or the joint link in the video description below for more details. All right, members and super savers, as always, I hope you enjoyed this video and learned something new. And if you did, don't forget to share with those you care about and hit that thumbs up, and see you again very soon with more brand new wealth building content for your financial journey.